Hey guys, Seeney here from Australian Wealth. Thank you so much for tuning in. On this channel, we talk about all things finance, stock market, real estate, and anything to do with making money. And I'm really excited about this particular episode because we're going to be talking about how for an entire year, I got Uber Eats for free. Right, now this is an entertainment video. This isn't financial advice, but it is something that I actually did. So it was right for me, but it may not be right for you. So you need to make sure that you do your own research. So everyone knows Uber Eats. They're part of the Uber company, which is mostly known for its ride sharing. But on top of ride sharing, they also have food delivery, and they also have a sector of their business called Uber Freight. So Uber Eats gives you access to all of the restaurants in your local area and gets food delivered directly to you at your door or at your work, wherever you are. Food delivery, of course, has been happening for years and years and years. Pizza places have been delivering forever, but Uber Eats has made it significantly easier to get connected with any of your favorite restaurants or takeaway places in your local area. And you know, sometimes there's nothing better than just getting food freshly cooked that is brought to you rather than you having to cook it. It makes things so much easier and gives you a little bit more time. And if you want to get Uber Eats for free, I think the best thing that you could do is to like and subscribe to this channel because I'll be bringing out a lot of crazy stories and some great advice about investments. So anyone that's familiar with Uber knows that it is a very large company. In fact, Uber has a market cap of $53 billion, which is pretty big. So of course, being worth $53 billion, it is also publicly traded on the stock market. In the last 12 months, Uber has managed to generate $14.5 billion in revenue, which is a significant amount of money. But still at this stage, Uber is not a profitable company. And that means that they're still losing money on the balance sheet. So it's only been a relatively short time and Uber has managed to expand to so many places and it's pretty much become synonymous with ride sharing and now Uber Eats synonymous with food delivery. So in the last quarter's financials, Uber managed to generate about 14% growth compared to the same quarter last year. And ever since Uber stock got listed, it has been incredibly volatile. I've seen it go from everywhere from $46 a share all the way down to $14 a share, which is a massive drop. See, very recently, Uber Eats has seen a massive surge in business because, of course, with all of the lockdowns that have been happening all around the world, people haven't been able to go and dine out in restaurants amongst a lot of people. So they still want to eat food from outside that they don't have to cook themselves. So your only options are really delivery or takeaway at that point. So Uber Eats is in a great position to capitalize on, I think, what was already happening anyway. It's just that the illness has sped things up. But of course, the real question is, how did I get Uber Eats for free for an entire year? So this assumes that you get Uber Eats 3 times a week for an entire year with a roughly $100 spend every week. So let's break it down. Uber is a publicly traded company. And what that means is that you can buy shares in the Uber Corporation on the stock market. This means that you buy a piece of ownership of Uber. So when Uber becomes more valuable, then the value of your shares goes up. And if it becomes less valuable, the value of your shares also go down. After following Uber for some time, I saw the stock drop from $46 a share all the way down to $25. Now this was actually at a really interesting time for Uber because what happens when the stock is listed, a lot of the holders of shares before the IPO, which is the listing on the stock exchange, can't actually sell their shares. They have to hold on to them. I think there's a period of about 3 months where the people that are invested in the company can't actually sell out of their shares. So I was following Uber from the listing and over time the stock began to drop. Went from 46 down to 40, down to 35, down to 30, and then down to $25 a share. This was all in the space of 4 months, and I knew that around this point was probably going to be about as low as it would get because it was a week after all of the pre-IPO investors were able to sell out of their shares. So by this point, the week after, a lot of the selling that the original investors wanted to do had been done. It was around this point I knew that buying pressure would return because it had come down such a long way, and a lot of the founders of the company were heavily selling shares, and that was of course going to drop the stock price down even further. So over the course of a few weeks, what I decided to do was load up on a position in Uber shares. So over the course of a few weeks, I put in thousands and eventually built up a position that was worth around $16,000. So I managed to get a cost basis of around $26, $27 a share. Then lo and behold, only a few weeks after that, the stock price began to climb back up. So during this time, as the stock price began to climb back up, the value of my shares began to grow. And in a relatively short space of time, I saw the value of the shares go from $26, $27 a share all the way up to $38, which is the point where I sold them out for a really nice profit of around $6,000. By doing this, Uber stock has effectively paid for all of my Uber Eats meals for the next year. And it means over the year, I have zero out-of-pocket costs for getting food delivered directly to me. How good is the 21st century? So one of the best things about Uber Eats is that you can smash the like button and subscribe to the channel. It really helps to push this video to more people so they can work out how to get Uber Eats for free also. So at the moment, I am no longer an investor in Uber due to the stock price rise, but if I see it fall back down below 25, then I'll definitely be looking to buy back in. In fact, during the great crash only a few months ago in March because of the Roni, I saw Uber stock get down to about $14 a share. Now, that would have been an incredible time to be able to pick up those shares, but of course there were so many deals in the stock market, and of course people only have a limited amount of cash to take advantage of these deals. So if I ever see it get back down there, I'll be taking full advantage of that. So there's been some absolutely crazy examples of this. If you think it's crazy that I managed to do it for food, I've seen people that have managed to pay for entire cars just from Tesla stock because the stock price has risen so dramatically. Now, of course, this isn't going to be the case in every single investment that you make. This one did involve quite a fair bit of timing, but it's about finding great undervalued companies in the market that have been beaten down or already quite low, and they have some great growth in the future. And I felt that at that time, Uber was one of those. And in a short space of time, Uber stock went from 25 all the way up to 38. And at that point, it was a good time to sell out. So thank you very much to Uber stock for paying for all of my Uber Eats for an entire year. So thank you guys so much for watching. Make sure you like and subscribe to the channel if you found this story interesting. And I'd like to hear some comments about what you've managed to get for free in your life. So once again, thank you so much for watching, and we'll see you later.